Hey everyone, and welcome back to the channel. Today, we're tackling a topic that can feel super intimidating but is actually one of the most powerful things you can do for your future: investing. A lot of people think you need a ton of money or a finance degree to get started, but I'm here to tell you that's totally not true. We're going to break it down, step by step, and show you that anyone, and I mean anyone, can start investing. So, what even is investing? At its core, it's about making your money work for you. Instead of just letting your cash sit in a savings account where it barely grows, you put it into things like stocks, bonds, or funds, which have the potential to grow much faster over time. Think of it like planting a money tree. You start with a small seed, your initial investment, and with a bit of time and patience, it can grow into something much bigger. Now, you might be thinking, that sounds risky. And you're right. All investing involves some level of risk. The value of your investments can go up, but it can also go down. But here's the key: the longer you stay invested, the more time your money has to recover from any downturns and benefit from the overall upward trend of the market. History has shown that over the long term, the market consistently goes up. The real risk is not investing at all and letting inflation eat away at the value of your hard-earned savings. Okay, so how do you actually start? The easiest way for most beginners is through a brokerage account. Think of it as a special account that allows you to buy and sell investments. There are tons of user-friendly apps and websites out there that let you open an account in minutes with very little money. Seriously, some let you start with as little as $1. Once your account is set up, what do you invest in? A great starting point for beginners is index funds or ETFs, which are exchange-traded funds. Instead of trying to pick individual winning stocks like Apple or Amazon, which can be tricky, these funds let you buy a tiny piece of hundreds or even thousands of companies all at once. For example, an S&P 500 index fund gives you a slice of the 500 largest companies in the US. This strategy is called diversification, and it's your best friend in investing because it spreads out your risk. If one company does poorly, it's balanced out by all the others. The most powerful force in investing is something called compound interest. Albert Einstein supposedly called it the eighth wonder of the world, and for good reason. It's when your investment earnings start generating their own earnings. So, your money doesn't just grow, the growth itself starts to grow. It's like a snowball rolling down a hill, getting bigger and bigger. The sooner you start, the more time compounding has to work its magic. Even small, regular contributions can grow into a surprisingly large amount over 10, 20, or 30 years. My biggest piece of advice is to just start. Don't wait for the perfect time to invest, because it doesn't exist. Start small, stay consistent, and think long-term. Automate your investments if you can, setting up a recurring transfer each month, even if it's just $20 or $50. You'll be amazed at how quickly it adds up. Don't panic when the market goes down, see it as a sale and a chance to buy more at a lower price. This journey is a marathon, not a sprint. You're building wealth for your future self, and that's an incredible gift to give. Thanks so much for watching. I hope this cleared things up and made investing feel a little less scary. If you found this helpful, give this video a thumbs up and hit that subscribe button for more content just like this. Let me know your questions in the comments below. See you next time.